What's up, investors? What's up, traders? Kane here from the Dyslexic Investor, and we're going to be looking at Disney and Netflix. We're going to look at it on different perspectives of the technical tradings with the charts, and then we're also going to dive in on understanding the fundamentals and so forth, and how looking at the charts and so forth, we'll look at it, the technical, and then again fundamentals again on paper, what's it's worth, their debt, the likelihood of succeeding, and so forth. Anyway, so let's go ahead and look at Disney chart first. So this DIS ticker is for Walt Disney Company. Closed at 42.45 yesterday on July 5th. So that's near its all-time high at 143.51, you can see here. And I think you can pretty clearly see when they announced Disney Plus here. And you could see it was right here where it literally jumped up well over 10 to 15 bucks. And it's kind of been holding that very low of that new high trend going upwards. You can kind of see here, again, using the yellow line is my main indicator of showing a very high potential continue push higher in the expectation of Disney Plus coming out again, which is like I believe November 12th of this year. That being said, like technically speaking, this is a fantastic looking chart. On all the moving averages are lovely lined up. Let's look on a weekly basis here. Yeah, still huge candle up when they announced here on that week. It was fantastic. You kind of see here, this is again, the yellow line is my gauge, so around the 130 level for the longer term investing would be fantastic. We are hitting the top end of the RSI, but we can see here, which we did break out on the red which is doing air quotes right now, a little bit slightly showing of oversold. I mean overbought. Meaning there's likely to be a retracement usually to the yellow line, or if it's something smaller to like the blue or even the white. You can kind of see here it did touch the white a couple times, and it's been hugging literally the 8 EMA on the way up on the weekly, and then on the daily is around the 8-ish as well. But the 21 again is a nice time to buy. So let's say you missed this move here, like, oh shoot, dang it, and you just saw it run up, you're like, oh my gosh, and then you saw it start selling off. You would have put an order in around this yellow marker here, on this yellow line, the 21 EMA. And depending on your trading plan, that would have allowed you to buy it multiple times, and you would have been a part of this beautiful little run up. Yes, you wouldn't have made that surprise. Like, not many people are going to get that unless you held the stock for the previous of that, like in the expectation of it. People have been rumoring when it was going to come out, but it wasn't a for sure date, so it's very hard to get that news just on that day. And that is a beautiful move up again that's holding the 21 and slowly climbing higher. Great looking on the chart. It's not oversold on the daily as well, but it's very close. And you kind of see here how much it was oversold on that week of that announcement. So that's pretty fantastic. Next would be, it's the #1 streaming service that everyone knows and loves, and I just finished Stranger Things season 3. Fantastic. Is Netflix. So again, this is the, let me get some of these lines away so it makes it a little bit cleaner. All right, you can see it's been bouncing like between these two levels here. Anywhere, this is the 200 simple 200 simple moving averages, little blue teal dotted line, and that's the, doing air quotes again, value investor line. You can kind of see here this has touched twice. It hasn't closed below it. I want to call that below it. Hasn't closed below it. Did go below it, you can see here, but it didn't close below it. That's two different indicators there. And it's basically in the trading range of 385 to 335-ish, give or take at $2 or $3, which is pretty tight trading range. You can see here on the RSI as well on the bottom here, not oversold, not overbought yet. We are seeing a slightly decline of momentum here, which could be a sign of just has been having a nice run since it's touched the 200 here and moved its way up. Let's go ahead and take a look on the weekly for the for Netflix. Okay, you can see here again, it's literally having a tough time since the beginning of this year, even the better half of last year. So almost the last year or so, having a tough time breaking 387. And that would be a very, actually we're going to draw a line there, make an alert. Okay, great alert. 387, mark goes above. Alright, so I'm going to set an alert out for that, and then I'm going to also draw a line for price. I like to do this just to give me a little better indication. Let's go here. I want to write on it. On the left, we're going to call it, do 52 week high. So I kind of know that it's been, this is a nice little line here. So once I do it, my daily check of my stock list here, of any potential buys or so forth, I want to look at this. Technically speaking, I'm more of a fan of the Disney uptrend than on the technical side. But then on the overall Netflix, I think it's a little bit lackluster on the charting side of things, because it has been bouncing around, and we kind of have to wait to see on where it breaks or where it honestly ends up. Let's go back to the Disney, DIS. Alright, so you can kind of see this has been a fantastic move. A couple things about Disney. Their Disney Plus service from today comes out in 28 days, 23 hours, 9 minutes, and 5 seconds. And then kind of shows you, again, everyone knows some of the Disney brands. There's huge Star Wars, Marvel, Pixar. And I actually didn't know they bought National Geographic. Some of the services that they're going to have their own Star Wars series, which is fantastic. That Star Wars series has rumored to have cost about $100 million, which is a substantial amount. So I think it's like a 10-part series. So this literally spent $10 million per episode on the Star Wars series. They're doing a couple spin-offs for Marvel. They're doing a couple new releases. So the day of launch, you're going to have some of the brand new movies. You're going to have Toy Story coming out on there. You're going to have Captain Marvel. You're going to have Endgame. You're going to have basically all the Star Wars on there. And Bob Iger also hinted that they're going to have, basically, if you remember anything about the Disney Vault, that's basically going to go away, and all the Disney movies that came on limited release will be on the streaming service. And then Simpsons, because they bought 20th Century Fox, that's going to be a huge kicker. That's like the longest running TV series, I believe. So that being said, like, this only cost, I think, $8, which is about $2 less than the cheapest plan at Netflix. Yes, this is not going to be for everyone. This is going to be more slightly vision on people who are Marvel or these particular brands fans, and it's not going to be as broad as like a Netflix, because Netflix has content literally from everyone. There's not the most great detail and the like bringing down to your favorite shows, but the content they have overall is fantastic for Netflix. But it's not as niche as, like, there's no other place where you can watch a Disney movie or Star Wars now, because all the contracts that are on Netflix are going to be running out. So I think that's what a lot of people have concerns about. Yeah, Netflix is not going to have a problem having shows, but how many people are actually going to watch the shows? Because if you Google search the top 5 shows within Netflix, most of them are not their own shows as well. So that's slightly concerning for me. What am I clicking on? What am I doing here? Oh, Netflix. So I think that's where it's kind of coming down to. So Netflix is doing, I think they do like $16 billion a year in content, which is 1/10 of what Disney said they're going to spend on Disney Plus. Yes, the most popular plan for Netflix is like $13 or $14, so it's literally almost double the price of Disney, but I think the Disney Plus app is going to be more tuned to families and people with children, because yes, Netflix has their own kids channel, but a lot of the stuff that I have, my 3-year-old watches is going to be the Disney related stuff, and if that's going away, that's a huge red flags for me, which I see us watching more Disney Plus than Netflix. But if I want to watch Stranger Things, if I want to watch anything that I like on Netflix, I love the documentaries on Netflix, and Netflix releases so much content on a given week. I think it's like 10 or 15 things a week. Sometimes some of it is licensed, but a lot of the stuff is built in-house or created in-house, or that they have hired people to create, from their own animated series to their own documentaries to its own action-packed shows to their own like short movies they've made. Some have, again, not all these are hits, but some of them are singles, some of them are home runs, like Stranger Things. Like Stranger Things is crazy big for a lot of viewers. And then the Hill House on Haunted Hill, like these more graphic adult TV shows are not going to be on Disney Plus. Like Disney Plus, that would be going against the grain of what Disney stands for. So that being said, I still feel that Disney is gonna not take. It's basically what my analogy or my outlook or hypothesis is that I see Disney Plus and Netflix again coexisting, because it's not a sum of all, not one player that wins everything. It's just going to be a slightly niche market on Disney catering more to family, and I can see that kind of deviating away from Netflix, not taking market share, but just shrinking the overall time watched. Of like, yeah, maybe if I watch 10 hours a week on Netflix, now it's going to be 5 hours on Netflix and 5 hours on Disney. So I'm going to be a little more selective on the content that I watch on Netflix, since I have another great competitor of Disney Plus in the play. So Disney Plus, I feel that is the stock overall. If I needed to buy any stock, again, I wouldn't buy it right here. Just a little pullback or something around the 129 to 125 level for this, and then I would be looking at Netflix to see a big kind of I won't say a red flag, but that 387 level is a very strange level where it hasn't been able to break through that. So, and again, Netflix really didn't collapse either with the Disney Plus movie coming out. So a lot of the smart individuals, the hedge funds, really see that these both can coexist in this current environment. But with Disney coming out, again, if you want to watch anything Disney, Pixar, anything that related, it's all going to slowly go away from Netflix and so forth. But the other concern I think a lot of people have for Netflix is that a lot of content is built in-house that people watch, but a lot of other people have come out and streaming services that they're going to start building their own thing. Like whoever does The Office, I read that NBC is going to be coming out with their own streaming service. Like the most popular show in the U.S. on Netflix is The Office. People love watching Office, Parks and Rec. They'll watch those series over and over and over. Breaking Bad. Shows like this is something that wasn't created within Netflix, so these are licensed content, and those will slowly go away over time, and seeing that might shrink the market share that Netflix has. I think Netflix has had such a huge market share of the overall streaming thing, because they've literally have not had much competition. They had like 4 or 5 years 4 or 5 years of no content. So it's basically Netflix market share of streaming. Let's see if they have nice little pie charts. That's what I'm looking for. A nice little pie chart showing me from something that's legit, not TechCrunch. That's not what I want to watch. What year is this? Netflix. Yeah, Netflix is like anywhere. What I'm looking at is like literally 60 to 75% of the streaming services, and like Amazon's like 7 and Hulu's like 14. YouTube is actually pretty far high up there at like almost 18 to 25. I see, but I feel that's shrinking just because there's going to be so many more players in the game, and Netflix needs to adapt in a way that I honestly don't know. They just need to make better more content that people like and kind of keep them subscribed and so forth in that sense. But I like to hear on what everyone, what do the dyslexic investors think of who will be, again, not a clear winner, but in the sense of like on the stock wise, whose stock has most potential of making returns for the investors and so forth. My money is on Disney right now. Netflix, I don't have any positions in it, but looking at this chart right here, it's got to hold this 387 for me. That's a huge line of resistance moving forward. Like to see what happens there. Again, guys, thank you so much for watching. Don't forget to hit that like button, subscribe if you're feeling lucky today, and yeah, I greatly appreciate it. Definitely check out the channel. I'll catch you guys on the flip side. Peace. Peace.